There's a 3-digit number that can shape your adult life: your credit score. In minutes, I'll show what it is, how it's calculated by the 5 factors, and how to start boosting it safely today. There's a 3-digit number that will follow you for the rest of your adult life, and most teenagers have no idea it exists until it's too late. This number will determine whether you can rent your first apartment, finance a car, or get approved for a mortgage. It's called your credit score, and understanding it now could save you tens of thousands of dollars in the future. So, what exactly is a credit score? How is it calculated? And why does it matter so much? Let's break it down. A credit score is a numerical representation of your creditworthiness, which means how likely you are to pay back money you borrow. The score ranges from 300 to 850, and it's calculated by credit bureaus like Equifax, Experian, and TransUnion, based on your borrowing and repayment history. Lenders, landlords, and even some employers use this score to decide whether to trust you with money, housing, or a job. The most commonly used credit score model is called the FICO score, and it's made up of 5 factors. Payment history accounts for 35% of your score and tracks whether you pay your bills on time. Amounts owed makes up 30% and looks at how much debt you have compared to your credit limits. Also known as your credit utilization ratio, length of credit history is 15% and measures how long you've had credit accounts open. Credit mix is 10% and considers the variety of credit types you have, like credit cards, student loans, or car loans. New credit is the final 10% and tracks how many new accounts you've recently opened. Each factor plays a role, but payment history is the most important. Here's how credit scores are typically categorized. A score below 580 is considered poor. 580 to 669 is fair. 670 to 739 is good. 740 to 799 is very good. And 800 and above is excellent. The higher your score, the better the terms you'll receive when borrowing money. Let's look at a real-world example. Imagine 2 18-year-olds. Both want to buy a $15,000 used car and need to take out an auto loan. The first person has a credit score of 720 because they got a student credit card at 18, used it responsibly, and paid it off in full every month. The second person has a credit score of 600 because they missed a few payments and maxed out their card. The person with the 720 score might qualify for a loan with a 4% interest rate, resulting in a monthly payment of around $275 over 5 years, and total interest paid of about $1,500. The person with the 600 score might only qualify for a 10% interest rate, resulting in a monthly payment of around $319, and total interest paid of about $4,140. That's a difference of over $2,600 in interest, all because of credit score. The danger of ignoring your credit score is that bad habits formed early can haunt you for years. Late payments stay on your credit report for 7 years. Maxing out credit cards, opening too many accounts at once, or defaulting on loans can tank your score and make it difficult to achieve basic financial goals, like renting an apartment or getting a reasonable car loan. The benefit of building good credit early is financial freedom. A strong credit score unlocks lower interest rates, better credit card rewards, easier approval for rentals, and even lower insurance premiums in some states. Starting early gives you time to establish a long credit history, which is one of the factors that improves your score. Here's your actionable takeaway. If you're 18 or older, consider opening a beginner credit card, like a secured card or a student card. and use it for small planned purchases, like gas or groceries. Pay off the full balance every single month to avoid interest and build a perfect payment history. If you're under 18, you can become an authorized user on a parent or guardian's credit card, which allows their positive payment history to help build your credit. Set a reminder in your phone to check your credit score for free once a year at annualcreditreport.com, which is the only federally authorized site for free credit reports. Understanding your credit score now puts you years ahead of your peers. This is not financial advice, only education. Do your own research and consult a professional before making any financial decisions. Ready to master your credit? Comment below with one thing you learned today and check out our next video on the biggest credit card mistakes young people make. Quick recap: pay on time, keep utilization low, keep your oldest account, avoid too many new apps, and check your report yearly. If you're 18 plus, start with a secured or student card and pay in full each month. Under 18, ask about becoming an authorized user. Tell me one thing you learned today in comments. This video is for education only, not financial advice. Always do your own research. Thank you for watching, and don't forget to hit like and subscribe.